Hello, I'm Kevin Ball from FX Trading Company, and I'd like to take another look at the US dollar, which we looked at on the 4th of October. If we look at our first chart, which is the US dollar daily captured today on the 8th of October, and as I mentioned, we looked at this on the 4th, which is only 2 trading days ago. This is the same labeling, which is again, we've been identifying over the previous weeks a possible B wave high. But on this chart, what I've actually done is added the labeling to the RSI at the bottom of the chart. And again, we've got a D wave low, and then I've just added the A, B, C, D, and E, which is on the price action, to the RSI below. And again, I've connected the B and D trend line with the A and C trend line. But on the RSI, I've just projected that forward with the small dashed line, which at this moment in time, the E wave has met and has fallen back below, with the RSI now falling below its averages, which it has done for a number of times. But as I say, it's just showing the price action, or the labeling on the price action, converted to the momentum. If we look at our second chart, which is the US dollar weekly, again, this is the possible B wave high, essentially, which is an ending diagonal into the high for the B. And I've added the term throw over, which we've had for a number of weeks, but I've added the element times 4. This is the 4th time now that price action has extended above that AC trend line, and the 4th time that it has fallen back below. And we covered in some detail on the 4th of October, the divergence seen in the RSI across the price highs, with the thick black line across the top of the RSI shown on the weekly chart. If we look at our third chart, now this is a 360-minute chart captured today, and I've just got again identified on this chart the B wave high with a question mark with the possible interpretation there. But if we look at the price action, since the US dollar broke above the AC trend line and then fell back below, this is again, and I use the term again, a very early labeling of 1-2, because we've added the labeling 1-2 for a number of times now in this interpretation for the B wave high. A break below what is labeled as wave D would add further evidence. Now, the reason for the labeling of these 1-2s, what we're looking to do is position ourselves to try and identify a small 5-wave decline, which would add a great deal of evidence that the B wave high is the correct interpretation. And if we look at our 4th and final chart, which is the US dollar on a monthly basis, and again captured today, but what I've done with this chart is just squashed the price data to the maximum to maximize the momentum study at the bottom, which is RSI with 2 moving averages. And the first red box on the left contains a 3rd wave, and you can see the RSI moving cleanly above its averages. The second box in the middle contains a 3rd wave, and again you can see the RSI moving clearly below its averages. The 3rd box on the right-hand side is the red box, which is what we currently have, with price action and momentum chopping back and forth, which it has done for nigh on a year now. So the price action is yet to break cleanly above from a momentum perspective. So again, the questions remain outstanding for the US dollar, but we will continue to watch this position over the coming weeks and see if the interpretation is correct and see how the position unfolds.